So we're coming up on the last recording opportunity prior to Christmas. Now, I could record more, right? But I usually just do some on Tuesdays and Fridays. You're probably not going to see a Friday because there's not going to be anybody around to edit. And well, let's just talk about the Christmas thing, guys. 2025 is about freaking over. This has been one brutal freaking year. It's been tough. It's been tough for a lot of folks. There's folks out there right now taking beatings in many, many ways. The one thing about it is you're on this side of the dirt still. So keep swinging. The one thing I'll tell anybody and everybody, no matter what it is you choose to do, you got to figure out who's the most responsible for all of it. That's you. You're the CEO of your real estate investment business, your daily life, all of that. You need to make decisions that you know are correct. You know, there's going to be people who are trying to influence you one way or another. Understand where their influence is coming from. Now, it's very hard to do sometimes. Man, there's some people that we've dealt with this year thought had the best of intentions, but it turns out their intentions may have been different than, or they got overwhelmed. Hard to say. I'm in one of those situations where you just do the best that you can do, double check everything. If you're getting into investment real estate, you've got to get inspections done. If you refuse to get inspections done, you fail to do that, it's on you. That's just the way things are. You got to get as many bits of data as you possibly can in everything you do. Now, is it possible to still have things go sideways? Yes, that's business. That's the way things work. But protect yourself as much as you possibly can. Work with people who want to work with you. They're communicating to you. If they're not communicating to you, that's where things start to get a little bit crazy. So things that were pretty surprising this morning. Woke up, see that silver was on a tear, broke $70. Pretty amazing. Gold was on a tear, broke 4,500. Pretty amazing. A lot of these things that are happening are pretty intense that what we're seeing. And it's showing that people they're not sure about parts of the market, but are going to more harder assets. Real estate's still holding its own. Those precious metals, definitely. I mean, copper's up $15,000 a ton. That's freaking ridiculous. Crypto, take a little bit of softening right now, but that's another thing that people are running to. They're a little scared of the other parts of the market. So other things you want to be involved in. I'm huge into whole life policies. Definitely want to make sure that's a piece of your life. Don't understand how those work? We'll connect you with some folks you can talk to. Again, decision you got to make for yourself. I'm not telling you have to, but I think it's an amazing thing. I use it myself. The things I talk about here is from my own experience. Things that I've run into doesn't mean it's perfect. No, but it means it's things that make me comfortable. Doesn't mean that you have to be comfortable with the way I do stuff at all. And who knows? I could all blow up in it, but right now I feel pretty certain about how we're putting things together. We do have a lot of things invested in, pretty heavy. I'm staying cash lean, very heavy in investments through the family trust, that kind of stuff. So that's another thing. You want to look at your entity structure, which we'll talk about in a minute. But before we get into entity structure, again, which we did the other day, let's look at this. I want to share this with you because I have got, if you haven't been here, I want you to take a quick peek at quitjerkingoff.com. So you can get your hands on a copy of Red Economics coming out in the next little bit. We got a few reviews out there that came out really freaking cool. One of the reviewers, the Blue Ink review, said, unafraid to speak his unruly mind, the author rejects the delicacy and handholding of many other self-help titles, relying instead on tough love and brutal honesty. I thought that was freaking cool. And there's a lot of that type of speak in most of what these guys are saying. So check it out. Go to quitjerkingoff.com, secure a copy, get that off to you. Appreciate you guys looking into that. Now let's look into what's going on with the QJO entity vault. That's another thing I want you guys to take a look at, see if it's something you can use. I find it to be very, 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 very beneficial. So you have here, so you can go into this. I got a little bit of an instruction video. I'm not the owner. I'm a guy who uses it, to put it that way. You build, it's not so much of building the legacy, it's how do you pass it on? Do they know enough about it to be able to understand it? That's the big deal. Can your family take what you build and can they operate off of it, or are they going to get lost? Are they going to forget, where's this mortgage payment going to be? Where's this insurance at? Where's this tax situation? You start getting into those things, you start putting yourself in a bad spot. So we have it all right here. You can you guys can build it together and see it. It gets exciting when you get to see it. Everybody gets to where they can like it. Then on top of that, you get to open up the entities themselves and you get to show them exactly what's in there, what it's tied to. You can show the information about the real estate. Is pretty awesome. Look, all the documents associated with it can all be right there. You get accounts, you can tie it to Plaid. There's a lot of cool features this has, and it's extremely, extremely reasonable. Those of you who grew up in the 70s, you remember the name Sally Struthers. She would walk on TV amongst a village of people that were starving and says, hey, for less than $1 a day, you can save somebody from starvation. For less than 99 cents a day, you can protect your family from losing everything that you created. Think about that. Think about the power that's there. So I'll get off of that here. Now let's take a look at the market. What's happening out there with that? So I thought I'd zoom back and show you back to all the Fed rate cuts that we've had over the last couple of years, right? This year, last year. This all Biden administration stuff. We have the changing of the guard. We have now what we've got with the current administration. Very interesting swings. And a lot of it has to do, my opinion, Aaron Chapman's opinion, with the data that we receive regularly. So look at this. Money going into mortgage-backed securities, into those bonds, climbing back up. And this all happens. What we swapped the presidency out in January, right? So January right here, where it swaps out, and it's been somewhat on an upward movement trajectory the whole time. Then we kind of settle in. Where are we settling in? Settling into the price of the security the day they announced quantitative easing in 2008. And it's just staying within that range, staying pretty flat the whole time, very steady. Look back here. Fed lowers rates, bam, beating. Fed lowers rates, a little bit of a beating, starts to crawl back. Fed lowers rates, another beating, and it starts to work its way back until you get into the new administration. Now, am I saying that that has any influence? I can't say it. But what I can say is that the news has been different leading into this. And especially after that extended government shutdown went for a very, very, very steady movement in the mortgage-backed securities. Not near the volatility. Look at how monster the volatility was before. So we're sitting at a pretty flat spot, not a whole lot of positive or negative movement. The interest rates are staying pretty steady. Don't sit here and wait for rates to get better. We're probably the best that we have seen for a long time. In fact, let's share it again so you can see. If you're waiting for them to get way better, I don't know that's going to happen. But then again, who am I? I'm just the guy who's been talking about this stuff for the last I don't know how damn long. But if you look at this, the higher it is on the chart, the lower interest rate is. We've held this longer than really any time except for back in 2022 when quantitative tightening really kicked in. But look at this monster volatility that we've seen in the past. Pretty significant. And if we continue to maintain this trajectory, I'd say find the deals that work. Something that's getting a bit of cash flow, paying for itself, amortizing. Somebody else is paying off the mortgage. If you're putting 20% down, they're paying off just with your 20% down. You're increasing 13%. You add in costs, could be 10%. 10% year over year appreciation on your investment or increase in your investment just by paying down the mortgage. Then you're talking about property appreciates 2.5%. 2.5% on your investment, which is 20% down, plus your 2.5% of the total value of the asset. But you compare it to your investment from your pocket, you can see another 10+%. You're over 20% right there. But for cash flow, don't make it about the cash flow. Make it about the deal. Make it about the asset. Make it about the growth. There is, you can make a living, right? Pay your bills with cash flow, but wealth is with assets. Focus on the assets, guys. Appreciate you. And I will talk to you guys after Christmas. Have a Merry Christmas. God bless you all. And we'll talk to you soon.